Let's talk about the reserve currency. Gold has had a fantastic year. And of course, immediately when gold rallies, whenever it rallies, everybody comes out and is like, see, everybody's moving away from the dollar. Nobody wants the dollar. It's going up because the dollar is declining. And so reserve currencies are being invested to do exactly what we just talked about. They're trying to maintain the purchasing power of those dollars by investing in asset classes that are going up in price.
When you talk about a reserve currency, what you're really talking about is what currency, now not what asset, not what speculative investment, but what currency does the majority of the world store their reserves in? Part of the reason the dollar is the reserve currency to begin with is because coming out of World War II, the U.S. was the global hegemon. We were on a gold standard. When we left the gold standard in 1971, there was a brief moment in time where the world had the opportunity to move away from the dollar if they chose to. Shortly after that, the U.S. made this agreement with Saudi Arabia where Saudi Arabia would price oil exclusively in the U.S. dollar. And since the entire world needed oil to run their economies, they needed dollars to purchase that oil. That's the origin of why the dollar is the reserve currency. And that contributes to the dollar demand to this day, because despite all of the talk about death of the petrodollar, oil is still priced in dollars. Even if it's invoiced in another currency, it is still priced in U.S. dollars.
I think this is a really important point that investors need to understand is when things are priced in dollars. And it's like, okay, I'm getting out of the dollar, so I'm going to buy oil. You're not out of the dollar. It trades in dollars. If you buy gold, gold trades in dollars everywhere in the world. So you're not really getting out of the dollar by buying other assets. And I think that's a really important point that investors need to understand is that when you buy another asset priced in dollars, you're not leaving the dollar.
You may be hedging your dollar exposure, but you're not leaving the dollar system.
Correct.
And that is a very important thing. And when the price of a commodity changes in dollars, that has huge effect if you're a non-US dollar-based investor or operator and you have to buy needed commodity inputs that are priced in dollars. Because even if you spend your local currency to get it, you're going to be spending the local currency equivalent of whatever dollar amount that exporter of oil is going to be asking for it. So it doesn't matter if it's invoiced in yuan or lira or reals, you're going to be paying a US dollar price for it.
Watch the full interview by clicking on the link below.